Hello guys, welcome back again. So here in this session, I'm going to start account payable. Now the question is, what is account payable? What do you mean by account payable? So guys, if you're from finance and account background, it will be quite easy for you guys to understand this, and you might be knowing this, what is account payable and all. If you're from non-finance and account background, then for you people might be like it is. I cannot say unknown, but still you'll be having some question mark in your mind. So I'll explain this in a simplest by giving some simple examples so that you guys will be having perfect understanding, and then we'll proceed further for the configurations and testing part. Everything will be there, and that too with detailed and exclusive explanations. So we'll cover all those things one by one, step by step. Let me start from this account payable definitions. So guys, if you talk about account payable, now look at here. If you're going to do Google search, so you'll be getting certain definitions. Say for example here, like an account payable is a liability for an amount owed to a creditor. Creditor means vendor, for the purchase of goods and services. These kind of definitions you're going to get from Google. For some of you, like whoever from finance and account background is there, as I told you, will be able to understand. Might be from non-finance and account background people still will be having some confusions. So the simplest definition is account payable means what? Account payable means we have purchased goods on credit and we are yet to pay off the creditor, right? You are yet to pay. Yet to pay means the payment is not made yet. It means in future you must have to make payment. So whatever payments are still due, whatever the due payments are there, let's suppose, I'll tell you, I have purchased a goods worth of 1,000 rupees from a particular vendor A. Okay, this is vendor A. From vendor B, I have purchased goods worth of 4,000. From vendor C, I have purchased goods worth of 6,000. Right? Likewise, we are having D. Let's suppose 2,500. E again 4,000. So likewise, multiple vendors will be there. Multiple vendors will be there. So now these all, whatever like this amount, this much worth of goods we have purchased, and payment is going to be made later because the procurement is happening on credit basis. I'll tell you guys one more thing here. Now here, generally, if we talk about as an individual, if you have to purchase something, or if I have to purchase something, simply we are going to visit the market. Let's suppose you have to buy a laptop. Now you'll visit the market. You are going to visit 4 or 5 shops, and then you'll collect some quotations, in the sense some small pamphlets they are going to share you on that. Like all the details will be there. Like this laptop is like having 4 GB RAM, 1 TB hard disk is there, Windows 10 pre-installed like operating system will be there, multiple like functionality they have, they'll be specifying over there, and final price also will be quoted. Apart from this, certain discount also they'll be specifying that this is the price, and on that we are offering 20% discount, right? So such kind of things will be there. Somebody might be they're going to give some additional, what to say, this one, like let's suppose they'll say that 1 year plus extra 2 years warranty, right? Somebody says that we are going to give some extra accessories along, mouse will be there, keyboard will be there, right? So such kind of offers will be given by people, right? So once so what is happening, guys? 4 or 5 options are there in your hand. We are going to compare, and then finally we are going to decide, okay, this is the best bargain for me, this is the best what to say option is for me, and you are going to select a final one. Finally we are going to make payment and we are going to buy it. This is what the normal purchase process is there for an individual, right? If you talk about the same purchase which is happening between organization to organization, Tata Motor, let's suppose, is there, and Dell Computer. Okay, so first of all, if Tata Motor required, let's suppose Tata Motor is going to order the computers, doesn't mean that one computer or one laptop is going to be ordered. Let's suppose Tata Motor decided to provide laptop for their employees. They're going to order in bulk, might be 5,000, might be 10,000 laptop is going to be ordered. So there, first of all, before ordering, what is happening? First of all, they are going to contact, like in market, like whoever the vendors are there, suppliers are there, like Dell is there, Lenovo is there, HP is there, HCL is there, right? Deloitte is there. So now, sorry, I quoted the wrong word to say this one, not Deloitte, it's Dell. So now, Deloitte is a, like well-known, what to say, this audit companies and all, which is the part of this big four. So now multiple organizations are there. Sorry, multiple, what to say, options are there. Even Sony is also there in this field. So what is happening, guys? First of all, they are going to invite quotations. I'll explain these things once again in details in the further classes, guys. There will be a 5M integrations topic will be there. There I'll explain. So now what is happening? They'll invite quotations from these all whatever 4 or 5 options are there in the sense this companies, and they're going to compare the quotations, and based on that they are going to decide that which one is the best option for them. Then finally they are going to place the order. How they are going to place the order, guys? In that also certain processes there. First of all, purchase order is going to be raised. PO is going to be raised. It is going to be sent to the vendor. Then vendor is going to deliver the goods, that is called goods receipt, is going to be posted, and vendor is going to send invoice also. There is a logic, guys, here. Goods, sending goods, and then sending invoices. So goods are going to be recorded separately in the form of goods receipt. Invoice is going to be recorded separately in the form of invoice receipt. That is going to be explained later. So now this is what, and then finally payment is going to take place. In the sense, finally payment is going to be made. So payment is going to be made doesn't mean that immediately the payment is going to be made, guys. There'll be certain time limit. In the sense, like might be after 30 days from the invoice, or 45 days from the invoice, because there'll be a procedure, right? Lots of approval is also required. So whenever any procurement is happening, like organizations to organizations, then the procurement or so-called purchase or procurement, both are same, guys. Okay, so any procurement, any purchase is happening. For that, what is happening, guys? The terms of payment is going to be negotiated with the vendor, that we are going to make payment after 30 days, after 15 days, after 45 days, after 60 days. These things are going to be negotiated. It means organizations to organizations, the payment, whatever this procurement is happening, guys, it is happening on credit basis. It is happening on credit basis, in the sense, take goods right now and make payment later, right? So let's suppose if Tata Motor has ordered a laptop worth of 1 million, worth of 1 million, it could be anything, whatever your currency is there, whether it is rupees or dollar or GBP or whatever other currencies. So worth of 1 million, let's suppose the computer or laptop has been ordered. So whatever this 1 million amount is there, right? This is your payable. In future, you must have to pay after 30 days, after 45 days. You are liable to pay this amount to the vendor, right? So this is why it is called, it is your payable. And in terms of accounting, this one, it is called account payable, right? And as you said, you are liable to pay this amount to vendor in future. So this is treated as your liability, right? If I explain account receivable, there again I'll quote some example. I'll let you know. Account receivable is nothing but, we can say, vice versa. So now what is happening, guys? So whatever these amounts are there, these all are like, this amount means what? We have procured certain goods from vendor A on credit basis. We have purchased certain goods worth of 4,000 rupees from B. Likewise, 6,000 rupees from C. So whatever these amounts are there, guys, this is your payable. If somebody asks like, what is the total payable? Look at here, the total payable is 17,500. It means this is what, if you have to like, if you're going to prepare the financial statement, in that what is happening, this is what the total payable is going to be shown, that 17,500 is the liability. It means this much worth of payment we are supposed to make to the vendor in future. So this is supposed to be paid to the vendor now. So this is called account payable, right? That is what I have specified here, right? Account payable means that we have purchased goods from vendor on credit. and we are yet to pay off to the creditor. We are yet to pay off the creditor. It means purchase we have made, right? Goods you have received from vendor, you started doing your manufacturing, right? So of course you are going to sell it. But what about the goods which you have procured from vendor? Vendor is going to send you invoice also worth of certain amount. So that is supposed to be, that amount must be paid. Might be after 1 month or 45 days or 60 days, whatever the terms of payment is agreed. It's okay. But whatever that amount which is supposed to be paid, that is going to be treated as payable, and in accounting form it is called account payable. Okay, so this is our liability. It means in future you are liable to pay this amount to the vendor. This is what I wanted to say. In account payable, guys, now in SAP, what is happening? So account payable means what is happening, guys? Account payable means, as I told you, like there are certain process, certain procedure to procure the goods and all, right? Altogether it is called P2P process, procure to pay process. Here, starting from purchase order, goods received, invoice received, payment, that is going to be discussed in later, in FIMM integration, guys. I'll explain it. But right now we are going to, in account payable, the basic account payable, we are like, see, this is called like P2P process. Means what, guys? Starting from, let's suppose, purchase order. Purchase order means, first of all, purchase order, and then goods received, and then invoice receipt is going to happen. So invoice receipt means invoice is going to be posted by finance team, account and finance team, right? So here right now, if you talk about the invoices, two kind of invoices will be there. One is called PO based invoices, and second one is called non-PO based invoices. PO based invoices means, first of all, it is going to be started from here. Purchase order. If let's suppose we have to purchase a raw material, some 100 tons or 200 tons of iron ore, or like anything, coal or whatever it is, raw materials are going to be procured. So for that, what is happening, guys? Purchase order is going to be raised. It is going to be sent to the vendor. Then based on that, vendor is going to deliver you the material, raw material, right? Vendor is going to send you the invoices also. So this is called like, so whatever invoice we have received, that is called PO based invoice. First of all, you have sent purchase order to the vendor, and based on that, vendor has delivered you the goods along with the invoices. This is called PO based invoices. So for that, what is happening, guys? PO based invoices means, for that we are going to follow which process? For that we are going to follow P2P process. P2P process. How to configure this P2P process, guys? There will be a separate session on this FIMM integrations, which is very famous, and very important topic that I'm going to explain in details. In details means pretty exclusive explanations will be there, guys. I'll try to make you people, understand by quoting very simple, small examples, and also that it will be easy for you guys to understand. I'll tell you guys now. Once again, I'll repeat here, because see, learning SAP doesn't mean that you have to learn the configurations blindly. No, you need to understand the concepts. Concepts, if you're able to understand, then only you guys are going to become a consultant. Or else, like, if you keep on doing configurations by watching some videos, or by getting from, like, by seeing some tutorials and all, if you keep on doing configurations and all, I get multiple calls from people saying that I have already done account payable, account receivable, general ledger, asset management, I have learned all the configurations. I say it is not possible to settle down your career as a consultant, because you know how to configure, but if you go for interview, people are going to ask why to configure. So how is not important, guys. Why is the everywhere in every organization configuration documents are there. Let's suppose this account payable we are discussing about, right? Account payable means, of course, we have to configure here. We have to go for some basic configurations initially, and multiple other topics also will come. That is also going to be discussed one by one. So here, like, of course, I'll explain how to configure, right? But before that, whatever configurations are there, whatever configurations we are going to do, you need to understand what is the use of these configurations. If I'll configure, let's suppose I says you have to create account group. So the first question is, what is this account group? And what will happen if you are going to set up the account group? What will happen if you don't set up the account group? Is it possible to proceed further without setting account group? Right? Multiple such kind of questions are going to be derived. And if you guys are able to understand these things and all, then I think it's going to be quite easy for you to become a consultant, because you know the logic. If you don't know the logic and all, simply you started learning how to set up company code, fiscal year variant, posting period variant, and if people have started asking questions, they will ask scenario based question. They'll give you a scenario, and then they're expecting answer from you. So guys, scenario based question, like scenario based question, if somebody is going to ask, it means what will happen? First of all, you need to understand the question, and you can understand the question only if you're having perfect understanding of that particular topic, right? So nothing is going to happen without perfect knowledge. Neither you will be able to clear the interview, and nor you will be able to survive also. Survival is also most important, guys. Let's suppose somehow you got the placements. What will happen? What you are going to do once you become a consultant? People are going to give you a huge package. It's okay. You are very much happy. But if you are unable to perform within, few days itself, people are going to send you out of the organizations, isn't it? So try to understand whatever the things are there, whatever the topics, whatever things are going to be explained by people. You just try to understand these things. Okay, so now anyway, I'll come back on the topic because I was just explaining here. So I was explaining about the PO and non-PO based invoices, right? PO based invoices means what, guys? First of all, requirement is there to procure certain raw materials and all. So for that we have raised a purchase order. Purchase order means what, guys? It will be having multiple details. Purchase order means, like, let's suppose details about what, like which material is required. First thing, what should be the quantity, right? When we are going to, what is our expected delivery date? Like, okay, this material we are expecting the delivery of material till so and so date, right? Like if the delivery is going to be sent to the vendor, so for which plant it has been ordered. For a particular plant, you'll be having multiple storage locations, that is called, right? So to which storage locations this like raw material is going to be supplied by vendor. So multiple these kind of details will be there in purchase order, that is going to be raised, and based on that, vendor is going to deliver you the goods, right? And then along with that, invoice is also going to be given. So this invoice is going to be posted with the reference of purchase order. This invoice, whatever is sent by vendor, that is going to be posted with the reference of purchase order. That is called PO based invoices, right? Now I'll tell you about the non-PO invoices. Non-PO invoices means what, guys? Let's suppose take example of like utility services, right? If you talk about the utility services, what is happening, guys? In utility services, say for example, Tata Motor is there, consuming the electricity. So whichever the electricity board is there, that is also giving a kind of services, right? So every month into what is happening, guys, based on the consumption, they are going to send the invoices. Here there is no purchase order, right? There is no purchase order from when there is no purchase order raised from Tata Motor, from Tata Motor side. Simply based on the consumptions, every month Tata Motor is going to receive the invoice from electricity board that this much amount supposed to be paid because this much worth of electricity has been consumed. This is called non-PO invoices. This is also a liability, guys. This is also we are supposed to make payment like after 15 days or 30 days, whatever the agreement is there between Tata Motor and electricity board, right? So this is also so in this case also we are receiving invoice, but without any purchase order. This is called non-PO invoices. Say for example, Tata Motor is taking services from a telecom company. Say for example, like BSNL is there, or else like Reliance Jio is there, or any other telecom company is there, which is giving like this services and all. So every month end, these people are also going to send the invoices, let's suppose based on the consumptions, right? So now what is happening? There is no purchase order for this services also. This now, say for example, Tata Motor is using internet. So internet also like a particular vendor is there who is giving services. For that also they are going to send invoices based on the consumptions every month, right? So such kind of multiple examples are there, guys. So this is called non-PO invoices. Okay, this is called non-PO invoices. So now here for PO based invoices, P2P configuration supposed to be there, and that is going to be done during FIMM integrations. That topic is going to be explained later in upcoming sessions. Right now, I will show you like basic account payable configurations, and then how to force this non-PO invoices. And based on that, multiple other settings also is there, guys, in account payable. That also we are going to discuss in detail. There will be quite exclusive explanations of on those topics also. I'll explain each and everything. First of all, why to do, and then how to do.